All right, good morning, everybody, and happy Thursday. Going to get started here in just a couple of minutes. Good morning, good morning. If you are in the Trade Ops chat room, I also, we're going to continue the conversation after this throughout the day as we are doing. So looking forward to that today. Got another busy news day, obviously earnings. We have to talk about a couple of things happening there. And I've got a couple of thoughts that I think are super important here for this for today and really going forward. So let's get started here in just a sec. There we go. Yeah, we'll get started in like one more minute. All right, here we go. Okay. All right. Let's start off with this point here. So, all right, let's get started. Good morning, everybody, and happy Thursday. This is our Set the Market morning show. Serge Berger here from The Steady Trader, and what we do here in our morning thoughts is we go through the market and we look at some of the most important things on our mind. And so let's get started. Before we look at anything, just quickly from a news flow perspective, I think today's focal point from a volatility perspective as well, so markets, in terms of markets may or may not react, is going to be President Trump's addressing the Davos crowd. Davos is the World Economic Forum happening right now in Davos, Switzerland. So that's going to happen at 11 o'clock Eastern time. So that's 8 o'clock 8 o'clock Pacific. It's 5 p.m. local time in Switzerland. So that'll be important, I think, as far as markets react. The stock market's one thing. I think what you want to watch very closely is the bond market and the dollar. That's going to be what's important. And of course, we all know that drives equities. So that's that. So that's quickly from a news flow perspective. In terms of the S&P 500, just quickly, we actually received a new trend following a buy signal this morning in the market rover. That is here. Let me bring this over here. Now, the reason I'm not taking this is because we're at the top end of the range. So, and also because I have long positions that I want to basically hedge at the top end of the range here. But just so you know, from a trend following perspective, we are actually getting a buy signal. So I don't want to necessarily disrespect that too much. But I also think it's a bit early, and again, we are in January, so January tends to get more sort of breakout, fake out readings. So that's one thing I want to point out. But again, we are in this choppy trading range, we have been now for basically since November. So it's not a breakout until we break out. So it doesn't really mean that much to me. If you're looking for momentum, the TST trender also is giving us a momentum a breakout. So that's on the momentum side. So you kind of have a lot of confirmation here. Nonetheless, what we're doing this morning, we're adding a hedge until we actually break out. And so we have a lot of earnings next week by tech stocks, which of course are going to be in focus. So I still think there's a possibility, and that's kind of why I'm hedging. I'm net long. We're net long in most everything. So it's not like I'm short stocks. I just want to hedge a little bit just in case. And I just don't, we're not breaking out until we've broken out. So that's kind of the point, just S&P centric kind of analysis. Now, in terms of very near term, and we're going to continue this part of the conversation over on, let me bring that over. We're going to continue this part of the conversation over on the Trade Ops chat room. So if you own an indicator, you have access to the Trade Ops chat room. Just make sure you reach out. Otherwise, if you don't have access yet, just reach out to support@thesteadytrader.com. and they will give you access to that. But I think very important here is going to be, let's watch the gaps. I mentioned this yesterday morning, and yesterday there was a very high probability that the gap, this is now talking literally intraday stuff, there was a very high probability yesterday morning that the gap was going to close, the up gap, because we've had now 4 up gaps in the past week. The likelihood that they're going to start closing, and closing pretty quickly, at least a couple of them or so, is very, very high. So this morning, the S&P, at least if we were to open where it is right now, is more or less flat. So the odds of filling this gap here, it gets higher by the day. So we're going to do this trade in the Trade Ops chat room here this morning, we'll start following it when the equity market opens in about 25 minutes or so from now. So that's one thing we're watching. So there's a lot of gap risk here on the downside. But again, they're not filling until they're filling, meaning, and we have no signal yet, by the way, either. So there's no actual signal yet. We got very close yesterday. I mentioned it in the Trade Ops chat room as well in real time. But we never got an actual confirmed signal for it to fill. So that remains a trade that I really want to focus on today. Just for perspective, if yesterday's gap fills, that's 50 basis points. That's it's not a huge point, but let me quickly just say that's 50 basis points from here. Let me do a little bit of math for you on that. Let me quickly bring up ES. So 0.5% would be, in terms of S&P futures points, that is going to be about 31 points. So one S&P futures short, 31 times 50, or let's say 30 times 50 would be the payoff there. So, and I realize not everyone here does futures, and that's not the point either. You can just buy a put. One could buy a put. But 30 times 50 would be $1,500 in profits if, with shorting one E-mini futures contract, the regular one, not the micro is a tenth of that, would be if the yesterday's gap closes, and that's again a very high probability as far as I'm concerned. Now that's very near term. So we've talked about the S&P 500. We've talked about the gaps potentially filling here on the daily chart. That's actually one of the reasons why I want to be not yet chasing the breakout, because A, we haven't had one, and B, we're now again a week in, 4 up gaps, none of them have filled. So I think there's a bit of possibility for some of those gaps filling. So, and by the way, any questions, guys, let us know. Also, make sure you give us a thumbs up, subscribe to the channel, very important, so we can continue to do this, and even more importantly for you, so you actually get updated in real time when we go live in the morning. Now, 2 very, very, very important points I'd like to make in terms of a bit more bigger picture. So when you think about the equity market, and you think about, and we're going to go much more long form on this as well, but I'd like to put 2 things in your head as far as the big picture outlook for your portfolios when you make these considerations. And I would like you to think about financials, particularly the broker dealers, particularly the underwriters. So we can look at this through the lens of, let's say, Morgan Stanley. I'm going to go really, really big picture chart on you for this, so you can kind of see what this looks like. So that would be this chart. Let me actually get rid of these moving averages. They're distracting. So I'd like to share with you what Morgan Stanley, and Morgan Stanley, of course, is a global investment bank. It's an underwriter. What that stock looks like. And I'm going to give you, let's put in Goldman Sachs as well. I'll put it into a different pane at the bottom, and sort of what that looks like. Now, Goldman Sachs has had a hell of a run. In fact, the stock since the breakout in March of last year is up 50%. Morgan Stanley is too, but Morgan Stanley's chart from a risk management perspective is actually favorable. But what I'm trying to show to you is this. So essentially Morgan Stanley, up until September of last year, like 5 months ago, that's not a long time ago, basically did not make new highs, sustainable new highs, since the year 2000. So it's been a big run since then, since that breakout. The stock is up 44%. Big move. But what I'm telling you is that there actually could be more, and here's why. And I really want you to think about this. This is not something you take advantage of today, but this is a really big picture thought. And again, we're going to make a big deal about this through YouTubes and webinars and stuff in the coming weeks and months and so on and so forth. So when you think about us being late cycle in the economic expansion, which we are, according to our work, that does not mean the stock market has to crash. What happens at the late part of the market cycle is that lots of companies have to go public. Private equity, I actually think is very crowded right now. And I'm not a private equity expert, but just from everything that I'm putting together, I do have to follow that. So there's a lot of companies that have been bought up, nurtured under the private equity umbrellas, and some of that also venture capital. Ultimately, all these companies have one goal in mind, to a large extent, and that's to go public. Bring those companies back to the public markets. They call it, exits, private equity exits. We haven't seen a lot of that over the past number of years. Rate uncertainty is a big part of that. Rates last year, over the past couple of years, spiked. And so I think a lot of companies were just concerned with what that means for the market. So there wasn't a lot of appetite either. But now we've got a new administration, more business friendly. I'm thinking I'm thinking about this through the lens of a private equity firm that wants to bring stuff to the market. And so there is actually probably a ton of potential of companies coming public. Now, what's going to happen, and this is not going to make CNBC. And this is, I hate to say this because this is not against, I actually like CNBC. I think there's good stuff on there. Some good stuff, some bad. It's like everything, right? But on average, decent content. But you're not going to hear it there. So, in fact, you can hear the opposite. What you're going to hear, if that starts to happen, is IPOs, IPOs, IPOs. Your favorite Twitter or YouTube clown is going to, entertainer that tries to peddle you stocks, going to talk about the breakouts of this IPO. What's going to happen? What's happening is that the machine, Wall Street, is selling you stock. Why are they selling you stock? They're selling you stock because the private equity companies have made all their money. Okay, so before you get giddy and you start plowing into those IPOs, think about what's actually happening, right? It's not going to be peddled that way. That's not, the news headlines aren't going to be that. You're going to get newsletters from all those bozos that have never seen a cycle. They're going to promise you have to get into this IPO and the IPO. It's all of its bullshit, okay? However, what's going to happen is that the investment banks are going to make money. Why? Because I used to be in that business. They underwrite stocks, right? So at the end of the cycle, late cycle, it's not the stock market that makes money. Stocks don't go up necessarily. It's the companies that bring stocks to the public, to market, that make money. Can I get a quick yes if that makes sense? And you may not or may not agree with this, right? But it's actually a crazy important point. So think about that when that happens, if that happens. I think there's a good chance a lot of companies are going to try to go public this year. Again, it's because there's a backlog of private equity companies that have to get off the balance sheet and go public. Because at some point, that's always the end game for these companies, right? So again, whenever you get the avalanche of newsletters from the bozos that have never seen a cycle, keep that in mind, all right? I know this may not resonate with a lot of people, and maybe a lot of you don't care right now. But you're going to care because a lot of people are going to fall into the trap of saying, oh, yeah, IPO. And just watch. I don't know if this is 2 months or 3 months or 6 months from now, but at some point you're going to see the Reddit boards and all these things blow up with IPO talk. It's happening for a reason. With the machine, the best selling machine, the biggest selling machine in the world is Wall Street. All right. And again, you're not going to hear this on CNBC much. They're not going to tell you this. They're going to do the opposite. They can tell you about the great IPOs. You can have the fast money shows in the world talk about the amazing IPOs as opposed to the opposite. So just leaving it here. We're actually, for the record, we're also time-stamping a lot of the stuff I'm saying here because I do want to be able to reference it going back. That's one thing. The second thing I want to quickly mention, I'm going to end it on this here, is this chart. And actually, my colleague JB and I think JB, you're in here, we were looking at this chart because I basically crafted it last night, actually early this morning. So what is this? And again, this is just an initial, I'm trying to put this into people's brain to think about. So we've talked a lot about being bullish energy, right? Energy is an important, completely underinvested part of the market. Valuations are very attractive compared to the bubble caps out there. Bubble caps meaning like some of the AI names that just are currently overvalued. Not for the long term, but maybe for the intermediate term. So what is this? 2 lines, 2 things. The red chart or red line is the price of uranium. The blue line is Oracle, and we're actually just in the process of building on this right now. But this is important. So why did uranium crash back in the 2010s? Well, because all the countries, many countries around the world went off nuclear energy. They're shutting the nuclear plants, all that stuff, right? For years, that was the thing. So uranium basically collapsed. However, look at what's been happening in terms of correlations between, let's say, shares of Oracle. And again, this is a work in progress. I'm just showing you something that we're working on between shares of Oracle and uranium. The correlations become very positive from being completely negative. And if you zoom in very closely over the past few months since September, the correlation is, I'm going to run it, is like probably 0.75. Now, why is this happening? And again, we're just working on this now. We're not yet finished with it. The correlation between uranium and Oracle, like what the hell is that? Why is there a positive correlation? And notice again how it's correlated, very, very highly correlated since basically September. It's it's the AI trade, among other things. First of all, I think the global investors are waking up that we have a tremendous amount that needs to be invested in energy. So it's just another way of trying to tell you that energy could be a next huge growth trade. But the fact that now you see something like Oracle, which is of course a tech company, software company, among other things, highly correlated uranium. Like, what's the connection? There has to be a connection, otherwise it wouldn't be trading in sync. And that's exactly what it is. In fact, you saw the other day, Larry Ellison, the founder of Oracle, he was in that new Stargate launch project where they're going to invest a lot in U.S. AI infrastructure. And so there's all of that is to me more than anything, at least for now, it's bullish energy, right? And so that's kind of where we are. So anyway, thought I would pass this along as well for what it's worth. Hope you guys find this helpful. Please give us a thumbs up, like if you enjoy the morning show. Went through a lot of important things here the past 15 minutes. Spread the word. Make sure everyone enjoys our morning show. 15-20 minutes, no BS, just right to the point. I'll see you guys over in the Trade Ops chat room. We're going to continue and start trading here in about 10 minutes and see what's going on in terms of opportunities. Thumbs up, like, subscribe to the channel, and we'll see you guys back here Monday morning. We don't do the live morning show on Fridays. I need a break from every once in a while as well, otherwise I'm running my batteries. But at 2 o'clock this afternoon, 2 Eastern, 11 Pacific, we are doing a member session for Vertical X Pro members. Please make sure you join if you're a Vertical X Pro member. And we'll see you guys over in the chat room here in the next few minutes. Take care, and I'll see you soon.